Hi everyone, I hope you're all doing well. I hope you're all staying safe in lockdown wherever you are in the world. This video has been sparked by a couple of conversations I've had this week with some traders that have been caught on the wrong side on oil. I've read lots about people and traders and even funds being caught on the wrong side on oil and losing a lot of money. And I wanted to make this video actually just to show why I haven't been on the wrong side, and how easy it is actually to avoid scenarios like this going forward. Now, the purpose of this video is not to show that I'm to make myself out to be a legend here. Look at what I've done. Obviously, it's really easy to be a legend after the event. That's not what I'm trying to do here at all. But for anybody who's tempted or thinking to comment under the video or send me an email saying that it's easy to say it after the event. If you want to go and check out the live streams on my on the website, see all the past recordings of this last 3, 4, 5 weeks. I've been bearish oil all the way through, so you can go and check that and why I haven't been buying oil. But I want to show you here, not to show that I haven't been caught out, but to actually just show how easy it is for traders to avoid certain scenarios like that in the future. Because what we're seeing at the moment in crude is a really unique scenario. There's significant supply or oversupply and a lack of demand issues that we have, but they've been foreseen by the main group of traders, which I always follow in terms of trying to pick a bottom in a market and trying to catch a top, for example. So I want to be looking at the commercials, the people that actually know and understand that market better than any speculator does. So I want to talk you through the information that we can get from looking at the commitment of traders data, looking at the positioning, and just show you actually what's really going on here in crude at the moment. Now, as we know, we've been hovering around the $20 mark for this last few weeks, and historically, if you just zoom away out here, we're at levels we haven't been for this last 20 years. 2001 was the last time, end of 2001 was the last time we were anywhere near that $20 mark, and we know what happened this week. We broke right through that. We went negative. We went to minus $40, but we'll get to that in a second. But what we can see, and from speaking to traders, is that they've identified nice levels of support. They want to be getting in, but thinking this is historically cheap, and on a historical relative basis, it is historically cheap. But if you actually look at what's going on in this market, and look at the people who know this market inside out, and that is the commercials, we want to look at the level of selling that they've actually been doing. And if we look here, just over 1.4 million contracts has been short. Now, that doesn't, to put that into context, I want to actually explain a little bit what's going on in here. Generally, the commercial activity will be increased. Commercial selling activity will be increased whenever they see a move to the upside. For example, you'll see increased selling because commercials operate on a risk basis. Whereas the risk to them, if a market's price is going up, the higher it goes, the bigger the risk to them will be to the downside. Or if a market's going down, the bigger risk to them will be to the upside. So they want to cover and hedge against that change. So typically, whenever you see, if you line up their previous peaks, for example, and on the short side, it typically lines up with peaks in price. You see these areas here. And coming back on more recent price action, we're getting into these areas over here, and then just the more recent times, we're getting into this point. So peaks are high levels of short positions by commercials typically are associated with peaks in the market because they see the market going down. Okay. Fast forward to where we are at the moment, though, and we've been sitting at $20 for this last few weeks. We've come lower now, but I want to isolate just what happened before the drop this week. And if you actually see what's happened, commercials have been building and consistently building since we've dropped down through that $40 mark. They've been consistently building up this short position. There's a really the scenario that you will struggle to find in any market in terms of looking at the COD data. But the fact that it's unique doesn't mean that it's not easy to interpret. Whenever they are selling, it is because they still perceive the risk is to the downside. So even though we're at a low level or a historical low level, they still perceive the risk to be to the downside, and they continue to build and build and build. Then just on a relative basis, they're more bearish. Think of it in terms of being bearish. They're more bearish than they were there, and that was at the time when we were just sort of flirting with the $70 mark. So they're building up a larger short position at $20 here than they were at almost $70 up here. So on a risk basis, they still perceive the risk to the downside even at $20. So there's been a lot of speculative traders, a lot of retail traders have been looking at just simply on the chart, trying to identify, is this a good level? I want to be buying at this level, but not really understanding what's going on. And it's so easy to come and actually look at data. The COT data is freely available. You can get it on our site. You can get it direct from the CFTC, but it's so easy to actually access this data and make sense of it. Looking on the flip side of it, to the people who have been wrong this week, if we look at the non-commercials or funds or speculators, they were starting to get heavily long at this level at $20, starting to build a long position, which again is rare for them, but again, you can just see they've been building up a long position, believing it's cheap down here on a relative basis. And if we look at the non-reportable, the retail, who are generally always wrong, and they do not have a good history, particularly in crude. Some markets they're better than others, but in crude they do not have a good history. And as I said at the start of the video, I've been speaking to a few traders who've been caught on the wrong side, but even just looking at this, there's a lot of traders that's been caught on the wrong side, but it's so easy to avoid this sort of scenario. I do not want to be on the same side these guys are on. So when I see activity like that, I know I shouldn't be buying. And if we look at spikes in their long positions, you see these big accumulations in these areas whenever they're spiked up in the past, they've always accompanied a top in the market. So they do not have a good history at all. So that's a really bearish signal coming from the non-reportable, and the fact that they're getting long, and with even more bearish signal, the fact that the commercials are really heavily short. So this is why I haven't been getting long. I have been building, if you look at some of the recordings on our website, I have been building up a position in oil ETFs, slowly starting to build positions in there, but not buying oil in here in a speculative basis or leverage, trying to get long into this. It's way too early, and the positions clearly show that it's way too early. Maybe a really unique scenario in terms of commercials being so heavily short even at a bottom, or what a lot of traders perceive to be a potential bottom, but certainly as a low price. But they're heavily short here, which still shows that they believe the risk is still to the downside. And if we just fast forward here, we can see the drop we've seen down into minus 40. It'll be interesting now. This week's data. This is Thursday. I'm recording this. The new data will be out tomorrow night from the CFTC, Friday, and we'll see how the end of the May contract has actually transpired into the new data. But I would still imagine there's going to be a fairly significant short position in here, and I will not be looking to buy in crude until we see these short positions drop off from the commercials and see some buying interest at these levels. But particularly want to see the short drop off into these levels where we typically see lows in the market. So there we go, guys. I just wanted to put out the video just to show how easy it is. It literally takes just a couple of minutes to check are you on the right side of the market, and that's the main purpose of why I use the Commitment of Traders data. It's there, it's freely available from the CFTC, so you can access it here on the website, but clearly taking some time just to understand what's really going on in the market before taking positions, it's a lot more beneficial in the long run, rather than just looking at the chart and thinking we're at a low level, it looks cheap, I want to buy in here. That's not really a sustainable way of going about these things. So hope you find that useful, guys. If you want, as I say, if you want to check out some of the videos or some of the recordings from previous weeks to see how I've been approaching particularly crude, by all means come in and do that and check out those recordings. But other than that, stay safe, guys, through this lockdown, and safe trading.